Good morning, and thank you for joining this investor webinar with Q Energy. Ticker is CUE. Q is a dividend-paying ASX-listed oil and gas company, so pretty unique, with performance underpinned by 4 core producing assets that are exposed to both international oil markets and strong domestic gas pricing, so well diversified. Today, CEO Matt Boyle will provide an update post the recent half-yearly and dividend announcement. Matt will run through some slides for about 15 to 20 minutes, and then participants can ask questions via the chat function in Zoom, which should be at the bottom of your screen. So thank you, Matt, for joining us today, and over to you.
Thanks, Aidan, and good morning, ladies and gentlemen. Thanks for your participation. I'd like to spend the next 15 to 20 minutes taking you through the half-yearly results that Q announced in February and a bit of a summary of our assets and where we're going in the future. So this has been uploaded to the ASX, and I encourage you to read the disclaimer and the notices here. Q Energy is an attractive investment at the moment. We've established ourselves as being a dividend-paying oil and gas producer, and we have significant history and significant projects in the future to keep that going. We have sustainable, high-margin oil and gas production, $27.1 million of revenue in H1 FY25, which we announced. We're also sustainable in a reserves sense. In FY24, we announced 100% reserve replacement, which means we're fulfilling our reserves when we produce. So it's a sustainable structure for an oil and gas company. We generate lots of free cash flow. Our EBITDAX was $15.2 million for the first half of FY25, and we increased our cash by 5% to $17.1 million at the end of the half. That includes $7 million in dividend payment we made during the half. We have a strong balance sheet, $17 million in cash as of the end of December, and no debt. And we're able to fund all the developments we'll talk about through these presentations are being funded and plan to be funded through internal cash flow. Out of our 4 producing projects, 3 of them have clear development upside. We'll talk about Powspiro and upcoming potential FID, ongoing drilling in the Mahato field in Indonesia, and then recent well results in the Mereenie gas field, which will support further drilling in the area. A clear driver of Q's value at the moment is our attractive dividend payment. We announced at the half year in February and paid yesterday a 1 cent per share interim dividend for FY25, which brings a total of $28 million in dividends paid over the last 18 months, or 4 cents per share. We have a dividend policy which is published, which is clear that the board considers dividends every half year based on our results and are committed to a sustainable returns for shareholders. Not lastly, but based on our results and our share price, we're trading at very low valuation multiples. So Q's success comes from 4 key production areas where we're a non-operator in all our projects, which means that through joint ventures, other parties operate and physically run the assets. We have a financial and decision-making say in all the projects. Starting in New Zealand, we have a 5% equity interest in the Maari oil field. We've had that interest for a long time. It's a steady production. The oil gets sold at Brent prices into the Australian market. In the centre of Australia, we have between 7.5% and 15% participating interest in Mereenie, Palm Valley and Dingo gas fields. These gas fields supply the Northern Territory at the moment and can supply the east coast of Australia. And we'll see that there's clear development options there. We've just drilled 2 wells in the Mereenie field, which were highly successful. In Sampang, in Indonesia, the Sampang PSC is offshore gas production, which is sold directly into power in East Java. A development project exists here called Powspiro, which we'll talk about later on, but clear growth in the next few years from Sampang PSC. And in central Sumatra in Indonesia, we have an onshore oil field, Mahato PSC, which has continued drilling for oil. So we've been drilling now there continuously for 3 years, and there's still wells to be drilled this year. Clear development, clear growth, including exploration. And Q is following a very clear 3-point strategy in the current success we are. First point is to maximize the value from our existing assets, and we'll do that through developing what we know, where we know it, including at Mahato, at Mereenie, at Palm Valley, at Paus Biru, and we'll go through all those projects. The lowest risk development is in the areas you know, and there's running room and clear options at the 3 of our 4 projects. The second leg of our strategy is shareholder returns. We introduced a dividend policy at the start of last year, and since then we have paid out $28 million or 4 cents per share in dividends over the last 3 halves. The final leg of the strategy is growth. Now we need to continue looking at growth and new projects. These will predominantly be in the areas we know, again, to lower our risk. We stay in the areas we know. We have the balance sheet strength to underpin these investments, but we do have strict investment criteria, so we are very picky in selecting in projects we will move forward with in the future. A summary of our first half of FY25 financial performance. As I mentioned, we had $27 million of revenue, $15 million of EBITDAX. Our cash finished the half year at $17 million, and we paid 1 cent per share interim dividend. We paid yesterday. And these dividends align with the policy we've introduced 18 months ago. So you'll see we've now made 3 dividend payments starting in April 2024 with a special dividend of 2 cents per share, followed up in the next half, paid in September 24, 1 cent per share. And then just yesterday, we paid 1 cent per share from the first half of FY25. On a yield basis, the 2024 yield is about 50% based on the starting share price in 2024. And for our recent dividend payment, the yield is about 20% on an annualized basis, given the current share price. A market capitalization, about $70 million or 10 cents a share at the moment. We have no debt, an EV of $53 million. And if you look at the chart there, you can see the trading and the changes in the Q share price and trading since we introduced dividends back in March 2024. Liquidity has increased significantly, and as share price, where we can trade up to 12.5 and 13 cents a share over the last month or so. The EV to EBITDAX ratio, as I mentioned, very low, and our 12-month yield is 20%, significant yield. We're able to show these great results because of the consistency we've got in our projects. On the left, we can show that our operating revenue over the last 2 years is consistent, and the first half of 2025 is on track to be consistent with the previous 2 years. 27 million, as I mentioned, for the first half. Very strong performance. The margins for the first half of FY25 range between 40 and 50%, with strong contributions of revenue from all our assets. So as a standalone, they contribute, and then in the future, they all have development options. We generated $13 million net cash from operations in the first half of 2025 from 27 million in revenue. We used $6 million of that for sustaining and development capex, and we paid $7 million of dividends out of that operating cash during the last half. I mentioned our closing cash was $17 million, of which we've now paid another 1 cent or $7 million a share. Part of the sustainability of an oil and gas company like Q's is our production. The main bar chart there shows that we have sustained our production at or above 600,000 barrels of oil equivalent over the last 3 years. The half-yearly production of about 300,000 barrels of oil equivalent is on track to continue that. Sustainability is what we're after, and as I mentioned early on, we also in FY24 replaced our reserves 100%. So we found new reserves for every barrel we took out of the ground. In the first half of the year, revenue was predominantly from Indonesia and then split between Australia and New Zealand. And oil and condensate was our primary product sold in FY25, gas being lower. Now that will vary depending on oil liftings and the time of year. So that's not always that heavy in oil and condensate. I spend a few minutes on our actual projects, more acquainting with our projects. So the largest revenue earner at the moment for Q is the Mahato PSC, which is onshore Indonesia in central Sumatra. This field was discovered in about 2019 and has been drilling production wells every year almost since then, since about 2021. So we've ongoing drilling, and the chart down the bottom shows the progress. We've got 37 approved wells, and every year we drill more. So we've got about 5 or 6 to go in the calendar year 2025. Should be finished the current phase of drilling by about the third quarter of the year. This field brought $11.6 million of revenue for Q, and the field production on a gross level is it's higher than 6,000 barrels a day. It varies depending on daily fluctuations in wells, but it's consistently been above 6,000 barrels a day. We export this oil and get Brent-based pricing, so it gives good exposure to Brent prices and global oil prices. In the Mahato PSC, we also keep considering exploration targets. We have a list of targets that are progressing through maturity, and exploration drilling is continuously under review. We believe there's a lot of opportunities. It's just about finding the right one. Also in Indonesia is Sampang PSC, where Q has 15% participating interest. The fields are Oyo and Wortel, and they produce gas straight into Indonesian power plant, which powers East Java. There's about $4 million of revenue for Q in the last half. And this is a declining field, so we've been in this field for 20 years and the gas is in decline undoubtedly. But what we have in opportunity in Sampang PSC is a new gas development, Paus Biru gas development. It's currently we've completed a feed and we're currently for pre-FID while we solve a few things in the joint venture and with the government. This was discovered as an exploration well by Q and the current joint venture partners in 2019. The product sales are in US dollars to long-term contract to the mentioned Indonesian power plant. So we're waiting for a couple of things within the joint venture and from the government, including an extension to the permit life. The permit currently expires in 2027. And to get the most out of Paus Biru, we need surety of extension of the permit, which is just in process at the moment. The development is targeting 20 to 25 million cubic feet a day. And if you note there, our half-year production was about 17 million cubic feet a day, so it's at least more than 50% more than our current production is expected from Paus Biru when it comes in production, and targeted at 2027. The development will consist of some new and some existing infrastructure. So there will be a plan to have a new wellhead platform over the Paus Biru field with a single well. We will then build a pipeline about 27 kilometres to an existing Oyong wellhead platform, and then use the existing infrastructure, including pipelines to shore and our existing gas processing facility. So a relatively simple development utilising existing infrastructure, and we have a an existing sales customer. Additionally, based on changes in the joint venture structure that are expected before we start producing Powspiro, Q has an opportunity to increase our participating interest from 15 to 25%. So that will be part of our consideration when an FID decision is made. At our Mereenie, Palm Valley and Dingo fields in onshore Australia, Q has between 7.5% and 15% equity interest, and these fields gave us about $5.5 million of revenue in the last half. These fields have been consistent suppliers to the Northern Territory gas fields, as you'll see in the chart down on the left. The green represents Q's participating fields, so 100% of the fields. And this is gas into Northern Territory. And over time, you'll see that the green bar at the bottom has been consistent, supplying gas for energy to the NT. The other fields in supply Northern Territory, including Blacktip, which is the large blue bars, has declined recently over time and has to be supplemented by the red and orange, which are LNG gas from LNG projects, which are a higher cost. So to continue our reliable supply of gas into the Northern Territory, we've continued drilling, and in December and to February, we drilled 2 highly successful wells in the Mereenie field, which boosted our production by 9 terajoules a day, or about 30%, and could be supplied to the Northern Territory within weeks because we have existing infrastructure, we have processing plant capacity, and we have pipeline capacity. We have new contracts that started in January 2025. So as we move on through reporting, we can expect that the average price received by Q for gas sold from these fields will increase above historical averages. And to continue the supplying gas from these fields and helping the Northern Territory with their energy needs, planning and approvals are progressing for 2 wells at Palm Valley. The timing of that could be towards the end of this year or into next year. The 4th project that's been consistent for Q and contributes to our strong revenue and cash flow is Maari oil field. Now, Q has been a participant in the Maari field for since its inception 20 plus years ago. It currently provided $6 million of revenue in the first half of the year, and the field production is over 5,000 barrels a day. Now, for a field that's 20 years old, if you look at the production profile chart there, on the right-hand side in January 2025 is higher than January 2023. So what's happening here is counter to what happens to most existing declining fields. We are, through optimization and water injection and optimization of all wells, we're able to not only sustain but increase the production, which extends the life of the field clearly. The oil from the Maari field is sold at Brent plus a premium, depending on the market, with about 2 lifts a half where we have bulk sales. And we're in the process at the moment of extending the permit, which expires currently in December 2027, have an application in for 10-year permit extension. Now, under the timing of the extension application, this was submitted about September, October last year, and it can take up to a year for the government to decide, but we're very optimistic that that extension will be granted. This chart shows a summary of our future developments and the options on the table to increase our production from our existing assets. So onshore Australia, as I mentioned, we drilled 2 wells in Mereenie at the start of this year, which are now in production and very, very successful. Follow up, the Palm Valley joint venture is considering and has put in for approvals for 2 Palm Valley wells. which could occur between Q4 of this year and Q1 of next year, again, pending final decisions and final approvals. The Mereenie joint venture is considering a number of options to keep production up in the Mereenie field, including looking at 3D seismic, appraisal of new reservoirs, including Stairway, and drilling more existing wells that we know the Pacoota reservoirs. Likely to be into next year, any of that, and it's still pending lots of discussions and decisions. In the Mahato PSC, we have been drilling development wells almost one a month for the last 2 or 3 years. Under the current development plan, we'll have finished those wells by about the Q3 of 2025. And of course, pending the results, the operator will look back and see what other opportunities there are to further develop and seek further approvals for development if it makes sense. We continue to look for exploration drilling options in the Mahato PSC. Given the timing, any of that, if we came up with some targets, for example, is still a fairly long lead time based on the approvals and the processes that need to be followed for exploration drilling. So anything that might come up, and that would be towards the end of this year or not before next year. In Sampang, the key development driver here is looking at the timing of Powspiro FID and the extension grant of the permit extension. It's a bit difficult to put a time on that. There's some administrative processes going on, but I would hope that within the next 6 months, we can see progress and movement on Powspiro and PSC extension. Targeting 2027 first gas. So we still, we need a couple of years to be able to develop that and build the infrastructure. And at Maari, as well as optimizing the wells and increasing production incrementally, we expect the license application to be reviewed by the government and completed sometime before the end of this calendar year, within a 12-month period. So that's 3 out of our 4 projects have development upside, and Maari has incremental optimization. So we expect continued sustainable production from all our assets. And as a summary, I'd like to recap by highlighting the performance we have, the attractive dividend, and the sustainable production we have. So we have high margin oil and gas production from 4 fields in diverse mix of geography and of product. That generates strong free cash flow for us, gives us balance sheet strength, and has enabled attractive dividends to be paid on very high yielding results. At 3 of our 4 projects, we have development plans or concepts ready to go, and there's also exploration upside at Mahato PSC. So this works towards the continued sustainability of our production, where we're replacing what we're pulling out of the ground. And overall, if you look at the investment thesis of Q at the moment, we have very low valuation multiples, given our free cash flow, given our dividend, given our current share price at about 10 cents a share. Thanks for your attention. I'll leave it there and open the floor up for questions, Aidan, if there's any coming through.
Thank you, Matt. That was a great run through. Such a good story now, and what an attractive dividend. Very unique, as I said at the start, in terms of oil and gas on the ASX. Yes, so let's see if there's any questions online. As the questions are going through, you can add to them through the Q&A function there at the bottom of your screen on Zoom. So here we go. Yes, a couple of questions around Powspiro, given that's the upcoming, hopefully, FID. So Matt, can you give an idea of the scale of that development in terms of what it would mean in terms of current production and reserves?
Sure, it's a good question. So if we went through the Sampang slide here, our production from the field gross level was 17 million cubic feet a day on average for the first half of 2025. The Paus Biru production is expected to come on at 20 to 25 million cubic feet a day. So that's up to another 50% more than the current production. So a very serious contributor, and especially in the first couple of years, to our cash flow. On reserves, Q carries contingent reserves of about 1.2 million barrels of oil equivalent for Paus Biru. So when we participate in FID and the development goes forward, we're able to transfer those reserves from contingent to 2P.
Great, Matt. And that's at the 15% level?
That's at the 15% level. If we take the opportunity to increase our equity to 25%, then those numbers would be proportionately higher.
Great. So potentially very material assets. Follow-up question on that one. How confident are you in that FID?
So it's been longer than we'd like talking about Paus Biru FID, but projects like this are integral to Indonesia's energy security. Confident it will go ahead. We still have to need to assess the final numbers and how the final concept works out before Q makes a decision, but it's certainly moving forward, but clearly at a slower pace than we would like.
Right, moving elsewhere in Indonesia. The PB field has been a huge success, but follow-up exploration in the Mahato PSC has not delivered a follow-up discovery to date. What have you and the operator learned, and how optimistic are you regarding a further discovery or discoveries?
So the PB field lies in central Sumatra. We know the reservoirs. We're about 20 or 30 kilometers from the biggest oil fields in Indonesia, Minas and Duri, and these are multi-billion barrel fields. So we know the oil's there. Mahato PSC is a large area, and given the large area and historical data in the field, it often doesn't make sense to do what people might expect and look at doing seismic to firm up your targets. So we have drilled a number of exploration wells without success in the last few years, and we'll continue to do that. We're looking for significantly sized fields, which will pay back any exploration we do. We're confident there's oil there. It's just looking for the right target.
All right, thank you, Matt. Jumping to Australia. The Australian asset base potential after those recent successful wells, again, how material could that become in terms of reserves and production?
So, as mentioned, we've just drilled 2 wells in the Mereenie field, and which contributed 9 terajoules a day of gas, which is about a 30% increase in the existing production there. So, very material increase. That's just happened at the start of this year. If you look back at the last well we drilled, which was Palm Valley 12, which is about 2 years ago in the Palm Valley field, the single well produced about 11 terajoules of gas a day. So wells can make a material difference in these fields to our production. That's why both Mereenie and Palm Valley joint ventures are talking about and discussing how we continue to develop these fields.
Right. A question on sustainability of production, cash flow, and probably dividend as well. Beyond Paus Biru, do you need another new asset to maintain production, or can the existing asset base provide sufficient upside to support production at least into the medium term?
Yeah, so we're always looking at new opportunities. Our focus is on developing our existing projects, as I said, at low risk. And Paus Biru is expected to start production in about 2027, so will be high production for the first few years there. But to continue our growth as a company, we continue to look for projects in areas we know not remote areas. So relatively low risk projects that can convert our balance sheet strength to revenue and production.
All right, there's one more question here. So if anyone has further questions, please do add them to the chat now. No mention of Juruk. What is the status there? That's another discovery you've had in the past.
Sure. So Juruk was an oil discovery from the early 2000s in the Sampang PSC, when Q at the time was partnered with Santos. So we have contingent resource booked for the Juruk discovery, but it's technically challenging. It's a carbonate reservoir, difficult to understand, and we continually work on new technologies that would help work out a development option there. But when we have opportunities like Paus Biru that are much simpler, lower risk, these move forward in the joint venture focus. So Juruk is still being looked at by the joint venture, but Paus Biru is the current focus.
Thanks, Matt. That's the end of the questions online. If anyone has any further questions, you can obviously reach out to us here at NWR or Matt directly. Maybe just a final one from me, Matt. Always interested to see what you are most looking forward to in the next 3 to 6 months. So what key events are going to excite you over that period?
So I think we've talked about them. I'd be excited by moving Paus Biru FID. They would move that forward. It's been a slow process. Excited to be able to move that forward. Certainly results from more wells in Mahato, where we've got about 5 more wells to drill this year, and keep that production steady and increasing. And then before the end of the year, I hope that we would be able to, as a joint venture at Palm Valley, make a decision on moving forward with some more wells in that field. So again, out of our 4 projects, potential in the next 6 months to have decisions on 3 of them and continue development.
Right, Matt. Thank you for that run through and the Q&A. The last 12 months have obviously been hugely positive for Q, and it sounds like it's going to be more of the same in 2025. So thank you all for joining this webinar this morning. With so much going on, I'm sure we'll have Matt on again very soon for a further update, and looking forward to a lot of those positive catalysts materializing in the coming months. So thank you all for joining, and thank you, Matt, and look forward to speaking to you again soon.
Thanks for joining, everyone, and thanks, Aidan.